Hello traders, you are welcome back to the Forex Geek channel, and I especially welcome you to this video where we're going to be talking about the best 5-minute moving average strategy. So this strategy is perfect for those who want to take advantage of short-term market movements while keeping things simple. By using moving averages on a 5-minute time frame, you can make quick decisions and spot trends as they form. If you like what you are learning today, be sure to hit the like button and subscribe for more trading tips and strategies. Now let us jump into the details of the best 5-minute moving average strategy and how it can enhance your trading. Okay? First of all, let us quickly review what a moving average is and how it works. A moving average is a trend following indicator. Let me add moving average to the chart first of all. Let's just set this to 20 and increase the thickness of this. Okay, so a moving average is a trend following indicator that smooths out price data to help identify the direction of a trend. The most common types of moving averages are the simple moving average and the exponential moving average. Okay, now the main difference is that the EMA gives more weight to recent prices, making it more responsive to price changes, while the SMA treats all prices equally over a specified period. So for the best 5-minute moving average strategy, the EMA is often favored, especially when you are working with short time frames like 5 minutes, as it reacts quicker to recent price movements. Now let us just set this up on your chart. To begin with, you will need to set up two moving averages on your chart. We are going to be using a short-term moving average and a long-term moving average. All right. So a typical setup would be, we're going to be adding the 5-period EMA, the 5-period EMA for the short term, and the 20-period EMA for the long term. Now, once your moving averages are applied, you will want to pay attention to the crossovers. When the short-term moving average crosses above the long-term moving average, remember in this case, the short-term moving average is the 5 EMA, the long-term moving average is the 20 EMA. All right. So when the short-term moving average crosses above the long-term moving average, it's a signal to consider a buy position. Conversely, when the short-term moving average crosses below the long-term moving average, it's a signal to consider a sell position. So this crossover strategy is simple yet highly effective, especially when applied to the fast-moving 5-minute chart. The best 5-minute moving average strategy revolves around identifying the right moments to enter and exit trades based on these crossovers. So let us just break it down. For your buy signal, when the 5-period EMA crosses above the 20-period EMA, this indicates a potential uptrend. This is the perfect moment to consider entering a long position. Okay, so you can enter a buy position after you get your bullish confirmation. Stop loss can be below the previous swing low, and your take profit can actually be at key resistance zones. All right, or you can just decide to watch out for when a bearish crossover happens, then you just quickly jump out from that buy trade. So in that case, we would have jumped out from the buy trade around here. Then for your sell signal, when the 5-period EMA crosses below the 20-period EMA, this suggests that the market might be entering a downtrend and it's time to consider entering a short position. So in this case, could have considered entering a short position after we got our bearish confirmation. Stop loss above the previous swing high. Take profit can be around key support zones, or you can just wait for when the 5 EMA crosses above the 20 EMA and you just jump out of the sell trade immediately. So in that case, we would have exited somewhere around here. All right. Now, what is crucial here is to wait for the confirmation of the crossover. Do not jump into the trade as soon as the moving average cross. Okay. Wait for the price to confirm the trend by moving in the direction of the crossover. Now, while the best 5-minute moving average strategy is straightforward, there are a few additional tips that can help you use it more effectively. One is to confirm with price action. For example, if you get a crossover signal, but the price action is unclear, for example, if there is a lot of noise or volatility, it might be best to hold off and wait for a clearer trend to form. All right, price action can help you confirm whether the market is truly moving in the direction suggested by the moving averages. Okay, and then you should avoid fake outs. Not every crossover will lead to a strong trend. Fake outs, where the price quickly reverses after a crossover, is common. You can see what happened here. After the crossover, price quickly reversed, and here again, and here again. So when you notice something like this, just stay out. When you notice a consolidation, or when the moving averages are just entangling each other, stay out. Okay, we need to enter trades when the trend direction is clear. All right, you can also decide to combine this strategy with other indicators like maybe the RSI or MACD for additional confirmation. Okay, now, as with any strategy, risk management is key. So always use a stop loss to protect your capital. For example, you place your stop just below the recent swing low for a buy order, or just above the recent swing high for a sell order. This way, if the market moves against you, your losses will be minimized. All right? Then for your take profit targets, of course, just set small, realistic profit targets. Since you are trading on a 5-minute chart, aim to capture small moves. This is a scalping strategy after all, right? So you just want to catch small price moves consistently. Those small moves will now build up over time, resulting in a significant move, right? Resulting in significant profits. So that is it, guys. The best 5-minute moving average strategy is a simple yet powerful approach that can help you spot quick market trends and make fast, informed trading decisions. By using moving averages to identify trend changes, you can enter and exit trades with greater precision. So if you found this video helpful, make sure to give it a like and subscribe to the channel for more trading tips and strategies. Drop a comment below if you have any questions or thoughts on how you have been using moving averages in your own trading. In the meantime, thank you for watching, and I look forward to seeing you in the next video. Happy trading.